Breaking news, everybody. Very happy to have you all back. Welcome. Well, we're gonna have I think really we're gonna have a good time, regardless what the answer is going to be in about 40 plus minutes. It's 12:25 here Central Time. It might be different where you're watching us from, and I'm just happy. I want us, and I think we're gonna have a great time exploring all the different possibilities. And we do this often. I come and hang out, and we see the actions, we see the CPI live, we see the FOMC live. There's a lot of commentary. There's a lot of people looking at what's going on, and obviously, we're following now with the community, CRONOS, SHIBA INU, Bitcoin, crypto, XRP, meme coins, community tokens. There's a lot going on. How are the news right now going to affect our tokens that we most follow, right? How are they gonna play out? And well, that's what we're live today. There's tons that we have discussed today, this week, the previous week, and well, allow us to enjoy. Instead of watching games on Twitch, which I love to do, by the way, we're watching something that can affect our financial freedom. And in my opinion, that is way more important right now. And if you want more people to see us, to learn, to educate themselves, well, you know what to do, everybody. Don't forget to smash the like button, guys, and consider subscribing to the channel. Welcome. We're early. In about a couple more minutes, we're going to see the decision whether Jerome Powell and the bankers and the entire committee decided for a rate hike pause or 25 basis points. I'm going to show you what the data says. And by now you're clicking on this video. I'm sure that you are well aware of what the possibilities are, of what we've been going through, of what the crypto community, we are just going, for massive after massive after massive news. And I couldn't be more excited. I feel great. I got my water and I got a bunch of things. We still don't see the FOMC meeting live on the Federal Reserve, but it's going to be up there soon. And how are you guys doing? So tell me in the comments right now. Get everybody here on board. And I'm going to go ahead and start a quick poll saying, are we getting a pause today? And yes, no. That's what I want you guys to tell me in the comments down below right here on the chat, because for sure I want to explain what are the implications of a pause. I want to explain what are the implications of a 25 basis points. And I think everybody is just expecting anything at this point. What I'll tell you is crypto, blockchain, you and I, we're gonna survive. How many awesome leaders right now are just going and giving their reputation for this industry because the SEC is falling behind with their confusion, with their bias, and with their corruption? There you go. 3 words: confusion, bias, and corruption. If guys, you don't have to only watch my videos. You're watching everyone's videos. You know why we're so pumped, why we believe the Federal Reserve, which I think is a little bit less political because the SEC is so political, right? So politically motivated, cannot believe it. So the Fed, I think we are getting the numbers that we want. I think the Federal Reserve, with Jerome Powell heading it, 2%, that's where they want us to fall down to. Once we reach that, that's a 100% could be guaranteed pause on the hikes. And finally, we can, as an industry, rise in price. Now, we're seeing the price. It's a while, because what I want to see with you, like I'm excited to see some pumps. Raise your hand right now if you want to see some pumps. Like, I want to see some pumps live. I've been waiting for them, and they just have fun, everybody. Come on. We are investors. We are players in the game that we just wanted some excitement, Yesterday, to all my Crow fam, I'm telling you, once we get to $1, I'm going to set up an in-person event, and let's have fun. Let's enjoy. So what I'm doing is nothing but trying to get back, and everybody, we want to all be together, right? So happy to have you all in the house. Brandon, Blad, Larry, Lights, Lazy Bones, Noel, Paul, and more. Welcome, welcome, welcome. So cheers, everybody. I couldn't be more happy to have you all here with me. So let's start massaging. Let's start massaging. You know what to expect. And like I've said, I'm still refreshing this. I'm not seeing anything just 1 month ago. So we've been going through a lot of different FOMC meetings, right? So March, May, June, and we have more to come. But this one, people were expecting a pause. No pause, right? All right. So you remember what happened here, right? Told you earlier today. A lot of banks are expecting a pause. So, man, if we get a pause, Emily, welcome. If we get a pause, I am pretty sure we're going to see some green candles. I'm not going to say 100% growth. I'm not going to say 2x. But at least I'm excited because we might see some green positive momentum. Target rate possibilities for 14 June Fed meeting, 500 to 525, exactly where we're at, 97%. And an increase of 25 basis points of 2.3%. People kept talking about a rate hike, and we literally have 97 probability of a pause. What in the world is going on? So that's kind of like what everyone is expecting right now. The market at 1.6 trillion. By the time we finish this live, let's see what the volume is going to look like. Right now, these are the players that are winning, and there's obviously a lot of tensions right here. So really, really excited. Pro will go to $1 in the market, and just right now, Trollcoin, welcome guys. Happy to have you all here in the house. Short term doesn't matter. Long-term plan is solid. Oh man, I really want you guys to teach the people in the comments of the videos, because some people just are short-sighted, and we welcome everybody, but it's just what it is, right? If you look at all the negative news, at all the lawsuits, at all the asset freeze requests, you will not be happy, and your joy will dry it up. And that's exactly why we do these things, because I believe in community. I believe in transparency, and I believe in excitement, man, because I'm here for financial freedom, but it's the journey. Come on. I love this journey, man. I'm not a millionaire yet. Some of you are millionaires. Some of you are still working in jobs that you hate, right? But we are on a common goal. I believe it, right? I think so. I may be wrong, but we are on a common goal to get out of where we're at to better places for our families, for our friends, and for our own selves. And cryptocurrency, what a devastating blow we got last week. What a devastating blow we got last week with the SEC weaponizing the agency. And now this week, we got massive lawmakers suing Gary Gensler and the SEC, telling them, hey, sir, you get out because we want you fired. And there's this, I have the SEC Stabilization Act. Listen up, everybody, and you can rewind how many times this video you want. We're here to teach everybody. We want to say like it is, right? In this time, old structure, we have Gary Gensler, the SEC chair, new structure. So this is something that Warren Davidson, right, from Ohio is proposing, right? Might be a long way to go for this to get activated, but we got a lot of commissioners and one SEC, chair. And now in this case, we have one executive director and a lot of people, which is a little bit more decentralized, the power, right? I like it, man. First green candlestick, nice, juicy, and beefy. That's how we start, everybody. So about 30 minutes away from the decision, 25 basis points or a rate hike pause. So go ahead and smash the like button, everybody. You have the poll right now going on. Let's get everyone here in the house. Welcome. Good afternoon. What's going on, brother? Watching from Virginia, Cryptomania. Happy to have you here in the house. Welcome. I always watch and appreciate you, Oscar. I don't come in much, but when we go to $1, I will celebrate with you and my crow fam. So I think you really have the right motive for this. You don't have an idea. Like, I don't even have an idea how many people were debating whether to sell or hold Bitcoin when it was $1,000. Am I right or am I right? Can you imagine buying Bitcoin at $1, $2 when Charles Hoskinson, Michael Saylor, and all those OG Vitalik Buterin? I mean, there are a lot of people that are right now in the industry. They're billionaires. They don't worry about money because they got in extremely early. They didn't sell. They kept holding. They believed in this industry, in the technology. And you're gonna come at me and tell me that CRONOS, Crypto.com, Shiba Inu, and Bitcoin are done and dead. I mean, I came to crypto late. I understand that. I don't know everything. I don't understand that. I still got a lot to learn. I understand that. But, my friends, if there's one thing we know is that first, they ignore you, then they whatever you, then they fight you. Maybe you want to help in the comments, I forgot. And at the end, they love you, right? They welcome you. They learn from you. They back you up. So, guys, it's just what it is. And I'm very, very, very happy to be in this boat with all of you, fam. Welcome aboard. Happy to have you all here in the house. Hey, Oscar, in my opinion, VVR Veracity Crypto. Look at that one, worth $1. Thank you, Joshua. Appreciate the comment. Ignacio saw the crow fam should be buying crypto all these lower prices before pump to $1. And, fam, I think you and I know, The Rock and I agree, sign, welcome. All the alerts are on. All the alerts are on. I mean, if people are saying Bitcoin to $500,000, Ethereum to $10,000 plus dollars, XRP, that's one of the biggest ones, biggest price predictions I've seen. Some of my fam tell me, oh, XRP is going to be $10 or so. CRONOS $1 it's like saying Bitcoin to $150,000. It's a must. I mean, that's the way I believe it, and I explained that in many, many, many videos, fam. I explained that in many videos, and I don't have to, Thank you, Trollcoin. I appreciate it. So, some of you guys who obviously are not here to hate, because I got a lot of haters for some reason for doing things right, I think, you see the true intentions. And guys, whether it's 50, 60, 70 cents, we're going to be much better off. You tell me right now which which blockchain has an AWS partnership and a Google Cloud partnership. Tell me right now. Oh yeah, CRONOS blockchain. Let's grow. Welcome, fam. Tell everybody in the house that we're live. We're waiting for this FOMC meeting results. We're going to be listening to Jerome Powell. We're going to be here for a while, for a long time, enjoying, just the fun. It's time for us to have fun and enjoy. First they ignore you, then they ridicule you, then they fight you, and then you win. There it is. There it is. What is going on, Johnny L? Happy to have you all here in the house. There it is. This is exactly why we matter. Levi is always saying things that are not accurate. Chris, happy to have you all here. Sabascal, it's good to get into crypto news from you, bro. I'm happy because right now I'm seeing a lot of my awesome members that they've been holding with me for a long time. Subscribers of the channel, members, this is what it is. For all the new people joining, well, if we get a rate hike pause, what that will imply is that finally the entire market and all the whales are now confirming the acknowledgement from Jerome Powell saying that the economy does not need the Federal Reserve interference to decrease inflation in the country. That's what it means. It means that now we have achieved a snowball effect where we will have to recalculate next FOMC meeting, right? It's not like they will always pause hikes, but the thing is, today, based on what we're all seeing, we're seeing very bullish news. And can whales use this news as a buy the room or sell the news? This is exactly what I've said. Let me go back here, right? On the tweet that I posted right now. Thank you very much for liking and retweeting, fam. Massive price action or sell the news. Obviously, people are going to be using this to buy short and long, right? That is not surprising. If you're in crypto, you know what it is. Check this out. Finally, pay attention to this. Finally, it's been a while. We've been in the greed, we've been on the neutral, but finally we have fear at 46, right? So what can help is what we're waiting for us today on the FOMC meeting. Let's go ahead and refresh this. If there's something here, there it is. There it is, everybody. Now, give me 1 second. I mean, we're still waiting a while, so I'm going to wait until the decision and then I'll click. But yeah, there it is. We are going to be ready to watch and learn from the man himself, Jerome Powell. So excited. If you have a question, please let me know. We're going to be analyzing everything. And right now, that's the 15 minutes. I'm going to actually go to the 5-minute Bitcoin, right? And obviously, right, there's going to be a lot of altcoins rallying, altcoins moving, SHIBA INU, CRONOS, ethereum, I'm sure. But really, I mean, obviously right now, Bitcoin is the catalyst for everybody to really put a lot of momentum, right? For sure. If they hate you, it's because you are ahead with them with your crypto sources, Oscar. Thank you, Chris. It is what it is, my friend. It is what it is. Roy, what's going on, brother? Oscar, I just bought 50K CRONOS, have an insider tip. Nice, bro. I mean, I have 100,000 plus. There's some friends, there's some colleagues that have millions of CRONOS in their bags right now. So they're really ready, you know, for the $1 CRO that is ahead. Incognito. Here's a joke, my guy. Happy to have you, Incognito. Welcome. My lady is also doing well. Happy to all my ladies or latest holders. That's really, really good. Joshua, I think we got the weakest hands out of the cryptocurrency, in my opinion. Oof. Newcastle, England says hi. What is going on, UK? Welcome. So everybody, in a couple more minutes, I think we're going to be seeing some nice crashes, some pumps. Definitely some delicious price action is ahead right now. It's a good time to remind everyone here where we're coming from a week, last week at the beginning of June, of a lot of lawsuits, of a lot of SEC corruption, confusion. Finally, yesterday, you know, I made the video, I updated everybody of what Binance.us in favor. The judge in the district court in Washington, I remember, they favor Binance. Basically, they are not accepting the SEC's motive, right? After listening to the SEC's lawyers on, you know, grilling Binance.us, and they're saying, you guys have until tomorrow, Thursday. Let me see. Is it Wednesday today? Yes, because my days are off right now. Tomorrow, Thursday, to come with an agreement. Deal it yourselves, the judge said. You still have, you know, go ahead and try to find common ground. And that's where I think the SEC is going to lose easily, because the SEC seems that they don't want to reply to all the requests from Binance.us, Coinbase, Gemini. And once they do, all of our exchanges in the United States are going to comply. Once they comply, that's it. It's over, right? We're going to be pretty delicious, and we're waiting for that, everybody. So, so far this week, fire Gary Gensler bill. That's a positive one. So far this week, we are, you know, welcoming new people to the industry. And I think overall, the CPI data, core CPI, we have from 4.9%, 4% CPI, and then from 5.5 core to 5.3 core CPI. That in all matches a possibility for a rate hike pause. So 200 votes, everybody, right now with 17 minutes, and a lot of you, 70%, say yes to a pause. Well, guess what? You are in the 97%. Current target is 500 to 525. And what this means is that no movement of any basis points. It's added, meaning pause in the hike rate. If we get that one, everybody, I'm going to lose my mind right now live. And it's going to be so fun. So, just looking at the price of Bitcoin, and I am going to FOMC Twitter here on my second screen because I want to see everything. There's a lot of people right now talking about it. Everyone. 30 minutes for the Fed interest rate decision and 1 hour for the Fed FOMC meeting. Oh, man. So excited, guys. Stay ahead and tune in. Absolutely. The most important FOMC of the year, Jerome Powell speaking in 3 hours, I mean, just in a couple more, 1 hour less. Historically, pivots lead to an obvious market move. So it's going to be very nice, guys, to see what people in crypto is doing. So let's take a look at CRONOS right now. The fact that CRONOS, it's going from 5.2 to 5.3. This is not much. It looks a lot because it's the 5 minute, but it is not much right now. Ethereum, 1737, not much right now, so it's kind of chilling. Let's go ahead and take a look at SHIBA INU in the 5 minute. A lot of consolidation, so far nothing. Oh boy. So Bitcoin, everybody. I think 15 minutes will be a little bit better for Bitcoin. So let's leave it like this. This is exactly kind of like what I want to see it. Today, yesterday, Tuesday. So let's go ahead and see the 30 minutes because I want to see where we're coming from. Perfect. I think this is exactly the view I want to see. Rick, welcome everybody. Happy to see you are enjoying your membership. Welcome. Have some snacks on the side, have some water. Got my water because we're gonna go for a long one. So far, this can be a good week for crypto. And just to give you an idea, last week we got a terrible week for crypto, and we just dropped a couple $1,000. So Bitcoin, 30% basically. With the SEC suing, there you go. With the SEC suing crypto exchanges, right? But can you imagine the comeback led by this news? Oh man. So we're coming from a 26,000 consolidation, fam. This was the crash of Binance. This is Bitcoin crash and pump and then crash. And then we're here. So we'll go ahead and put the price right now. And the price to bid will be roughly $27,000. That'll be amazing if with the news right now, bulls can do a 5%. That will be amazing. So I'm telling you right now, right? Anything and everything is on the table. So I'll put it right here. I think this is exactly where I want everyone to understand, the ranges. And I'm going to explain it to you. This horizontal or, inclined white line, it means the range, right? From the top 30,000, the bottom of $19,000. And it's been an increasing range, right? I'm going to show you right now here in the 1 day. It's going to look better. So there it is. So you see how this price channel is going forward. Even though the price has gone down, we see that it's been respecting the 15,000. That was our bottom, the 19,000, and right here about the 25,000. So it's been following it, right? And to me, it's an important channel to watch. So everyone, it's on the same page. There it is. So what I want to do is stay sticking to look at this, and well, everything is on the table. And if 5%, 5% is a good day in Bitcoin. It's a good day. Can we have a pump like this today? Answer, absolutely yes. Absolutely yes. I've seen this before. 5% is nothing for Bitcoin. It's a good day, and everybody's gonna be like, we did extremely nice. 10% and above, that is unheard of, right? That will be absolutely this is out of the world news. 10% Bitcoin, but 5%, yes, we can. Can we do This, let me see, what is this? Can we do 3% or so down and break the channel? The one that I'm talking about. Possibly if we get a hike, if we get a rate hike of 25 basis points, that goes totally the opposite to what everybody's expecting. And then, well, there you have it. We might have some sell-offs along the way. So welcome everybody. Johnny, Tectonic, Pro Fam, Diamond Hands. Let's go. Running, you've been seeing a lot of people buy crazy amounts of CRO on Twitter. 500,000 CRO, 375,000 CRO. All of the places people are posting their purchases. Texas in the house, Ignacio. Happy to have you all here. Welcome. Oh, man. Trollcoin. Let everybody in the Trollcoin Discord join, fam. Thank you so much for being here, and I appreciate your really passionate and a strong support, from Trollcoin community. Some of the awesome altcoins that we have on CRONOS chain, and that I feel really passionate about those, fam. So we are at 12:51 p.m. Central Time. Nine more minutes to see the Fed's decision at the FOMC meeting. Oh man, I'm excited. Come on, baby. Send it. We're going to see everything live. I'm going to go ahead and get ready. And you're going to see everything super, super live right now with me, fam. So welcome aboard. I'm so happy everyone is live today right here, because that's the idea. I started this live with a lot of fire and fury saying, guys, this is exactly what we do crypto. A lot of people don't understand. A lot of people might don't like it, but they like the gains, right? When we make money, when it's green, when it's a bull market, they like to be our friends. They like to hang out with us because they know we know what we're doing. But when it's a bear market and people are suing our crypto exchanges, they're like, he doesn't know what he's doing. He's losing money. She's losing money. Get away from me. And we are losing some friends. Well, we are the community who will better understand what this is all about. And that's why one day, CRONOS $1, we're going to have a nice in-person event, fam, to enjoy it and meet some great fellas. And I'm sure SHIBA INU, once SHIBA INU reaches to a certain level, I'm pretty sure there's going to be community rally and having a great time. Bitcoin is really the major catalyst here for us to, boom, enjoy everywhere. Switzerland in the house, welcome aboard. Oscar, I wait this live, sent home from work. Say, let's see my Oscar. Thank you very much for coming in on hot. We're here ready. Just a couple more minutes, brother. Let's go, fam. Let's go. Hello, everybody. Thank you, Rick. Appreciate it. From Europe. Love it, everybody. This is exactly what we want to see. So far, 15 minutes. And I'm looking at the 15 minutes because if I look at the 5 minute, then it's going to, look super huge. And I want a little bit more of view, of big picture view. There you go. Okay. Good. Not much. Let's stay calm here. Let's stay a little bit calm. I mean, you guys in the chat go wild. Please, for me, you guys in the chat go wild, but just 7 more minutes left. I see some green candles. People are excited. Can we do 5 minutes? Obviously 5 minutes. So this is yesterday and we're coming all the way here. So just the fact that we passed these two resistances, first resistance, second resistance, that will be amazing. So let's go ahead and do first resistance and second resistance. That will be our levels to watch, right? There it is. So I am extremely positive, fam. We can break those resistances. The first one easily. We get a rate pause. Easily we send it off the chart. First resistance done. That's less than 5%. That's absolutely through. Come on. Absolutely through. Love to see the hearts, everybody. Thank you for sending those hearts. Appreciate it a lot. Cheers to everybody. Just know, fam, we're 300 people here watching, and it's gonna be 3,000 people watching one day, God willing. Once, instead of red lawsuits, persecution, and corruption, we start seeing bull markets, pumps, rallies, and a lot of awesome projects being built. Mark my words. That's just what's gonna happen, fam. And I saw it in the last bull market, and it's just incredible, man. Currently focusing on growing my crowback, delicious prices. Luis, Patreon in the house. What's going on, brother? Happy to have you here in the house. Welcome, welcome. To all my moderators, you know what to do, fam. You see a spam comment, anything else, bad words, whatever, you can leave it to me. But spam, only spam, and just spam. Get them out. Get those people out. Get those bots out. We don't want them, because it's, of course, going to be a long live that we demand the most professionalism here, please. Thank you, thank you, thank you. Will Gary Gensler be fired? Well, that is exactly why 2 lawmakers introduced a bill on Monday that they've been already talking for a while on it. So it will be awesome to finally see, man, to come and get him out. 4 more minutes, everybody. 4 more minutes to see something delicious. Results in 5 minutes. I'm just seeing the Twitter on my other screen. I'm looking at the charts right now. This is live right now. People are waiting for it. So in a couple more minutes, we're going to go to a live vision and streaming, what's going on there, reacting, listening. It's just going to be awesome to see, fam. Woo! Let me go to the latest here. Let's go. 4 minutes to FOMC. Whew, 5 minutes till the decision. Everyone is looking, fam. And I am so excited. We're so excited for this. So this is what the community it's all about. Welcome aboard, fam. If you're having fun, if you're learning from what we're talking, do me a favor and smash the like button, guys. Consider subscribing to the channel. Turn on those notification bells. My name is Oscar Ramos, and I couldn't be more happy, blessed to be here with you here today. Oscar, will the abolition of the Federal Reserve by the end of crypto be the end of crypto, or allow us to flourish? The Federal Reserve is not going anywhere, brother. Yeah, that's not going to happen, in my opinion. But I think what you want to try to say is the adoption and recognition of Bitcoin. Would that be the beginning of the end of the current system? There you go. Just change the entire question to make it a little bit more sensible, right? So it's not really deleting the entire system, although obviously there's a lot of people who will want to see that. But it's how can we welcome Bitcoin and crypto and all of that? All right, we're starting to see some green. We're starting to see some green, fam. Yep, there you go. How about 2 minutes? Come on, everybody. Come on. Give it to us, fam. Thank you, Johnny. Appreciate you guys being here. Let's go. All eyes on Bitcoin. All eyes on crypto. All eyes. Everybody's saying pause. Everybody's saying pause. And we'll just see. We'll just see, right? We got 2 minutes left on this one. 2 minutes left. See if we can do some major rallies. And it's going to take a while. It's going to take a while for the rally to really do something, right? So everyone is waiting. Let's get it. Body ready. I'm seeing the comments right here on Twitter. Everybody is doing it. We got a lot of different people with FOMC hashtag. Let's go. 1 minute. 1 minute, everybody. What is it going to be? We can easily see with the price. We can easily see with the price. It's coming. Fed Chair Powell is finally here. FOMC in 30 minutes. The meeting is going to be. But watch your guru. Everyone is going to be tweeting this. What is it? 12:59. 12:59. 1 minute. I just want to see some official news because there's gonna be it's gonna be, you know, you see some sales. Okay. We start seeing some red candlesticks right there. Let's see. Latest. Buckle up. Green. Oh, skipped. I'm starting to see skipped. Federal says rates allowed FOMC. Fed holds benchmark rate 5 to 5.25 target range. Breaking, the Fed has paused the rate hike for the first time in 15 months. Federal pause. Pause, right? Pause. The Federal has paused the rate. Here it is, breaking. Everybody, we got to pause. We got to pause. Let me go ahead and confirm everything, but I think it is a pause. Let's go ahead and go top right here. Refresh. There it is. FOMC up the no interest hike rate. There it is. No interest hike rate. We're seeing no interest hike rate. Breaking. Fed has announced no rate hiking in FOMC meeting today. Pause, everybody. Confirm. Breaking. Fed has announced no rate hike in FOMC meeting to rate. Fed, because there's everybody posting, so I'm just trying to find, obviously, let me go to my trend line, but I'm going to look at the breaking. There it is. Watch your guru. Here it is. Here it goes, everybody. Pause. Breaking. U.S. Federal Reserve pauses interest rate hike remains 5.25%. There it is, everybody. Official. Get me all the fire emojis right now, everybody. Get me all the fire emojis right now, baby. Send it. Let's go. That is exactly what is expected. That is exactly what occurred. The first pause in 15 months. We got the first hike rate pause in 15 months. Saying, there you go, Johnny. Welcome. Really, really good news, everyone. Really good news for the entire crypto market, for the stock market. Do not be deceived. What you're seeing right now in the price of Bitcoin is whales and retail getting the news right now. Just let it get to the FOMC meeting. Just let it get and pass the FOMC meeting. And I'm pretty positive we're going to be looking at 5% and above. Oh, man. We might have some sell-off. We might have some buy the rumor, sell the news. But I'm sure that we're going to go higher, fam. This is exactly pause, baby. We gotta pause. Absolutely. There it is. The Fed pauses. This is amazing. We did 4 spaces of breaking. Fed keeps interest rates unchanged. So this is massive, everybody. Breaking. The Fed decides not to increase the US interest rates. The first pause in 10 consecutive hikes. Let me go ahead and post this one in the chat for you. Look at that. Look at the comments right now in the chat. Let's go, everybody. Good job. Do not let that candlestick, scare you. Don't let this candlestick scare you, fam. Just take it. People are right now selling, are manipulating the market. No worries, fam. This is what's going on right now in the 15 minutes. I've seen it. I've been here. No worries. Things are going to swap around right now. This is really good. Everybody, this is what we all needed, and this is going to help the markets as a whole. Sometimes you see the green rate, the green candlesticks rise a lot, and they immediately get sold. I'm pretty positive some green candlesticks are going to happen sometime in this live or as we head into the end of the week, because macro-wise, this is what whales wanted. But there's going to be a lot of movement, a lot of sales, a lot of different things. So 26 minutes away from the FOMC meeting. Everybody get your snacks because we're going to be looking at that. This is really good. 97% was right. Everybody here was right. So really, really good job. And this one from fear, it's going to go back to neutral or bullish. So let's go ahead and get this one ready too. We got the FOMC meeting coming up pretty soon, so that's going to be fine. I'm going to go ahead and get it ready. So it's right now going live. So I'm going to go and look at that one pretty soon. I'm looking at the price. I'm not leaving the price with you guys. So flight rate hike. Yes, it was. Emily, the comments are going crazy. Everybody's very excited. Yes, we are very excited, Emily. That I can tell you. Trollcoin, CRONOS to the moon. So far, let's go ahead and take a look at the prices here on CoinMarketCap. We're having some in the last 1 hour. Not much movement on the prices of crypto right now. Still 1.06 trillion, so nothing much there yet. When it comes to CRONOS, still the same. When it comes to SHIBA INU, still the same. When it comes to Bitcoin, just a couple of green candlesticks in the 15-minute chart. When it comes to the rate right now, because it was announced 6 minutes ago, boom, this is what's going on. It's all right, fam. I'm looking at some delicious green candlesticks as we heard for the conference call. I think we're at a turnaround. Have about 47 million Shiba Inu in the past 3 weeks. Boom. Big Oscar Crow fam. What is going on, Mattia? Happy to have you here in the house. Welcome. Loving this environment and just the news, fam. This is really good. So far, the price of crypto, the price of Bitcoin has done less than 1%. Don't let the candlestick scare you. It happens, right? It's part of crypto. This is not gonna go anywhere close to $24,000. It's just the way that whales play, and should be looking very greenish as we continue onto the meeting. So it's coming up pretty soon, fam. I'm ready. So what are we expecting? Well, it seems that, let's talk about what occurred right now. It seems that Jerome Powell was pleased with the lowered rate on the core CPI. The core CPI now is 5.3. The CPI, right, is now 4%, which means that he now assumes that no federal funds rate intervention rate is going to stop it from going down. Now he's just like, you know what? Let's leave it, and slowly but surely we're heading to our 2% mark, the 2% number that is critical for the entire Fed to do it. So I'm ready, man. This is gonna be awesome. Some green candlesticks. Why red? Welcome to crypto. People shorted, and this is the 15-minute Bitcoin right now. Let me go ahead and move it right here a little bit. So this is roughly about, what is it, 2% from the price channel. Makes, total sense, if it sells off a little bit. But just let sellers do the best they can. Let sellers do the best they can. And let buyers come back and dominate. Don't forget to smash the like button, everybody. Consider subscribing to the channel. Welcome. So I think it's now the time to end this poll. And how many of us were right? 74% say yes, and we got a yes. So that is really good. Oof. Exciting times, fam. Exciting times. We love you, Oscar. We'll celebrate together. John, happy to have you here in the house. Welcome aboard. Taking out the shorts. Yeah, the shorts are having fun right now, but just let us come with the bulls, and they don't even gonna know where we're coming from for sure. The first pause in 10 consecutive hikes. Everyone is saving crypto. Gotta go troll my backs. Welcome, Robin. Happy to have you here in the house. Welcome to all the new fam coming up and enjoying the live with us. So far right now, the entire crypto community is going to be really pleased with the numbers that we're putting in. I'm going to go ahead and take a look at my Twitter page right now, and I'm sure everyone is really pause, bullish. Here it says the statement. I'm going to go ahead and open it. So I'll just go ahead and show it. Just put it right here. for everybody to see really quickly. So recent indicators suggest that economic activity, this is what the Federal Reserve issued right now, has continued to expand at a modest pace. And job gains have been robust in recent months, and the unemployment rate has remained low. Inflation remains elevated. Well, it still is elevated, but now it's going down. So the committee seeks to achieve maximum employment and inflation rate of 2% over the long run. So they decided to maintain the target rate for the federal funds rate at 5 to 5.25. Holding the target range steady at this meeting allows the committee to assess additional information and its implication, so wait for the next FOMC meeting, basically. The committee is strongly committed to return inflation to 2% objective. Yes, we know that. Good. So just went ahead to the committee remarks of why they took that decision of, pausing the interest hike rate and the interest rate. So that's pretty good. This green candlestick, you're going to see it green. And once you see it green, you're going to see like, oh, when will it stop? For sure. Tip before the rip. It's true. Everyone, diamond hand. SHIBA INU is blessed. Going whole for family will be blessed. Future millionaires. Awesome. Real market moves won't happen until he speaks. Absolutely. That's why we're waiting. About 20 minutes. About 20 minutes ready for this to occur. And yes, I'll be excited to show you guys very, very, very soon. So far, let's go ahead and review a little bit to recalibrate, right, where we're heading. What occurred Monday, fire Gary Gensler, hashtag Gary Gensler resign, and fire Gary Gensler bill introduced by 2 lawmakers in Congress. Positive. Then Tuesday, we got CPI data down, core CPI data down, and we got Binance.US asset freeze rejected. So no asset freeze. We are defeating the SEC slowly but surely. And today, Wednesday, we're hitting an interest rate hike pause because they are looking at all the numbers and all the trends, and they're saying there's no need to increase it, Jerome Powell. So that helps Bitcoin and the market as a whole to continue approaching the $30,000 range as we head to the next FOMC meeting, right? It's not going to happen today. It's not going to happen tomorrow, maybe. But what we're going to be looking is a much better territory as inflation is cooling off and the entire economy, can be a little bit more back to normal. That helps everybody with money. And we are going back to places where people can buy crypto. So that's important, fam. That's important. So far, Shiba Inu, crypto, Ethereum, they're not really looking like they're moving right now. I'm seeing it up here. So everything's staying consolidated so far. We're looking good. We're looking good. Oh, I'm so excited. That was super cool. That was super cool, fam. Really, really happy, to see that that decision with you all. Well, the fire, this is exactly what we're here. People come, see their decision, and they're, okay, I'm out. That's fine. Everybody at our own page, slowly but surely. Now, I always really enjoy listening, learning as a content creator. You come for information and you leave. I need to keep my game to the top. And that's my responsibility that I love, fam. Finally hit 1 million, Jasmine. Kudos to you. Call me Alpha. Really happy. Really, really happy. Thank you, Oscar. A nice week with the FOMC update. Awesome. The sad thing is people still think that Shiba Inu and LUNC will make people millionaires. Shiba already has millionaires. If you buy it now, you'll just be exit liquidity. Omar Barrios. There's, of course, a lot of different strategies, right? And people, well, you never know, right? Absolutely. Is it difficult? Yes, it's difficult. Is it impossible? No, it is not impossible. But for sure, things have to change in the market for us to come to an ultimate conclusion to that. Justin, here's what changed in the news federal statement. Text appearing for the first time in the news statement is in red underline. Awesome. What we want to see, fam, exactly what we want to see. There's everybody on Twitter, 15,000 people speaking on the Fed, on the Fed decision. So I'm really, really happy that we got 300 people here, crypto investors watching and listening at the Oscar Ramos channel. I couldn't be more happy and blessed. One day, we're gonna go back to these times and enjoy. Now, first 15 minutes. This is important. Let me recalibrate my analysis here. First 15 minutes, it's a red candlestick, right? So the second, as it continues, it's gonna tell us an important trend. If the second candlestick in the 15 minutes is red, then that indicates a downward trend, right? For sure. So I'm still, seeing this takes a while. I don't have a crystal ball on me to see where the price is heading, but I'm sure that when he takes the podium, things is gonna change for the positive. That's my expectation. 15 more minutes for this to come in. So excited and happy. I'm gonna go ahead and move a little bit right here so you can see everything really, really, really good. Perfect. Well, actually, like that because I'm gonna split screens. Let's take a look at Shiba Inu because I know I have some Shiba Inu fam. 15 minutes, everything just seems a little bit sold off. Crypto.com a little bit sold off. Ethereum a little bit sold off. Let's go ahead and take a look at the market on the Bitcoin dominance at 49. Not bad. Binance reached $252 and right now $244. So Binance was coming up really nice. Not bad. So I always like to see and analyze different prices, right, from all different tokens. So it gives us a much better perspective of what the market is going to. Crypto.com showing Bitcoin bouncing up at this time. Love it. Any thoughts where we can convert CRO to top up the CDC card? Many other assets converted, but not CRO. I see. John, good one. What's up, Oscar? What's going on, CP? Welcome. Thoughts on LUNC, Oscar? 1 trillion staked. Not bad. Once you have 1 trillion stake, you're taking a lot of that from the circulating supply. Colombia showing Bitcoin bounce upward. Good. Right now I'm on index on Bitcoin. So far, it's the red candlesticks that are dominating this stream. I just saw this posted on internet. Oscar, your thoughts on crypto.com or crypto shutting down in the US? You mean crypto.com institutional exchange? Yes, it is. That was posted last week, if I'm not mistaken. And that is because the demand is drying up based on the SEC and all the enforcement actions that are happening right now. So far, so good. So far, so good on that one. 1.06, everything staying the same with the FOMC rate hike pause. Nothing changes right now. Everybody's holding their money. I'm waiting for that call. So what I can take from here is we got the news because I remember it so vividly. I believe it was the second FOMC meeting of the year. And once the decision was announced, price of Bitcoin pumped a lot. So right now we have a hike pause and the price is like this. There's obviously a lot of people waiting for what he's going to say. Waiting. So I'm not surprised. Not surprised. I got 200K cross stake on Jerry's pool now. Kudos to you, man. That's awesome. A lot of you putting a lot of crow there, and you are gonna see me once we reach $1. Remember, all the crow fam, a in-person event by yours truly, Oscar Ramos. I don't know where yet, but we gotta hang out. We gotta enjoy. And whether you are a Shiba Inu LUNC, everybody will be welcome to come and participate. But more on those details once we approach $1, right? But I'm gonna do it. I wanna do it. It's time for the CRONOS to be recognized. And I want to meet new people, and I want to really have everybody have a great time. That's the idea. How am I going to do it? I don't know, but I'm very, very positive there's going to be a lot of people who will want to support. 10 more minutes for this to start. 10 more minutes for this to kick in, everybody. And I couldn't be more excited. Let's go ahead and take a look at this one. Federal Reserve pauses interest rate hikes. Oh, yes, they did. Dow drops 350% as U.S. stocks tumble after hawkish Fed skip. Very good. 25,981. The price rose lower to 26, and right now around 25,852. So it's just a consolidation that everybody kind of want. We can all look back at the 4 hours. We're basically in the same consolidation square right about here that we've been since the weekend, this past weekend. So nothing major has changed. Once we break this resistance or once we break this support, that's when major headlines are going to come. But it's all about waiting for him to speak, and maybe one of these two can be broken, right? So I'm excited. I'm waiting. This is exactly what we're kind of looking for, right? And I'm teaching you, right? I'm telling you what I'm looking, because this was the drop. Now we need to come back to the top. Welcome, Marco. Happy to have you here in the house. The 5 minute. Let's go to the 15 minutes. Okay. Let's go ahead and delete this one and go back to where I was. There you go. Perfect. Oh, man. Couldn't be so excited for this one. There it is. Boom. Nice time to buy quant token while it's low. I know that's another one that I need some cash for that one. Thank you for reminding me. Incognito, appreciate that. Thank you very much. Oscar, I'll come and won't tell you who I am. I'll just know. You'll just know. All right, that'll be awesome, guys. Everybody will be welcome at that meeting for sure. Yeah, Oscar, I'd like to see your videos. Great work, mate. I appreciate that. Thank you so much, Marco. I got a lot of nasty comments on YouTube, but what is the call? Haters gonna hate, right? Taylor Swift. Haters gonna hate. That's fine. The loved ones, the productive ones, the good feedback is what we care and continue pushing forward. All right. 8 minutes for this to start, fam, and I'm ready to rumble. I'm ready to take a look at this one. Once the time comes, boom, we're gonna go ahead and look at everything. Listen, usually he speaks for about 10 minutes or so, and then we have like a 40-minute long Q&A, and then after that, he's dismissed, everybody's out, and boom, that was another precious FOMC meeting. About to hit 1 hour live, everybody. Cheers to everybody. Tell me in the comments right now what you guys drinking. I got some water. If you got something else, well, that'll be awesome. And kudos to wherever you're watching us from. Right now is 1 p.m. or 1:20 in Texas. And to all my Texas fam, and American fellows and Mexican fellows and whatever you're watching us from, thank you so much for being here. There's a lot of places where you're getting your data, your information, and well, it's always good to have everybody here on board. Perfect. Let me go ahead and show you this one really, really quick. FOMC, all you need to know, no rate hike increase this month. Rate cuts are unlikely in 2023. Fed goal remains 2%. Fed signals possible rate increase this year, and 2 rate hikes with 25 basis points expected by the Fed this year. Overall hawkish statement. Let's go ahead and go back here. Boom. There it is. Pina colada, that's awesome. Crown Royal, my man. Some energy, water. Let's go. Sweden in the house. That's awesome, guys. Thank you very much. 3:30 a.m. in Australia. All my Australian and New Zealand and Asian fellows, and wow, fam. That's the dream. That's the dream. All right, 5 more minutes. So let's go ahead and do this. I'm gonna go here and I'm gonna do this and I'm gonna do this. I've done this before and I can do it again. There you go. And we're gonna go ahead and do this. Perfect. So I'm still looking at everything. I'm gonna hide the volume. So this is Bitcoin. Everything is on the table right now, fam. We're seeing the live. We're seeing the price movement. Oh, yes. So let's see, where are we gonna fall or go to? 2% and we break the price channel. 5% and we break the second resistance. Let's see what's gonna happen in a couple more minutes, everybody. Gonna be more excited. Couldn't be more excited. Welcome, welcome, welcome. Rate is unchanged. Yes. Hopefully this can help boost Crow. I'm officially a Crow card holder because of you, Oscar. Alexis, awesome to hear that. I'm a card right here. Boom. A lot of Obsidian, Ruby, White IC card, and more. Get ready. I'm sure that all the awesome sport events and major partnerships, Samsung included, you know, it's all going to matter at the end of the day. It's just about going through this market together. And then after that, when altcoins rally, because here's the deal. Why in the world meme coins, right? We had about 2 months ago, meme coins with no utility, no background, no type of reserves or what have you, broke all through the charts because people needed to spend their time making money. They were tired of waiting, right? We all were tired of waiting on the big altcoins to do something. Once the big altcoins rise from where they are right now, I don't want to say dead, but rise from their sleep or their dream, that's when you're gonna see, like, why is Shiba Inu not stopped from rising? Why Bitcoin is now $70,000, right? I don't want to be in the position of, oh, Bitcoin is $70,000. You know what? I'm finally gonna buy. Oh, Ethereum is now $7,000. I'm finally gonna buy. That is the most preposterous, ugly, disgusting mistake I could do to myself. Because I've been in the game since 2021. Why would I wait so long to do that? Makes no sense. I believe that to be the truth, right? I'm not gonna wait until it's the right time now. You gotta make it worth it, fam. 2 more minutes, fam. 2 more minutes. Welcome aboard. Shout out. What's going on, Will? Happy to have you here in the house. Let's go. Oscar, the most trusted news source on crypto. Thank you, Robotech. Appreciate that a lot. Always learning. Always learning. Because if you're not learning, you're falling behind. Worth a gamble. FOMO will make us rich when we're selling in 2025. Incognito, remember, guys, you become rich when you sell, right? Or when you hold so much Bitcoin that countries are allowing to use Bitcoin as payment. That's another one. Bitcoin will be used to pay for houses. Bitcoin will be used to pay for automobiles. Bitcoin will be used to, to pay for everything, like El Salvador. And that will be the goal for sure. That will be the goal. All right, fam. Soon, we're going to be heading into the FOMC meeting. You're seeing right here on top. We're going to be listening to everything. And get ready. Get ready. In about 1 minute. 1 more minute. Get all those fires excited in the chat, everybody. Help me out with the fires. And if you're a member, with Crow and your favorite emoji. Let's go. All right, I'm going to go ahead and move this one right here. There it is. Boom. The Barbarian, thank you so much for your kind support. It comes to a perfect time to have that alert, right? The FOMC. Do you think we could see Crow pump a bit from this? Yes, we just need Bitcoin to do it first. Thank you. All right. Should be coming any time now. I'm going to refresh once again. There you go. All subscribers, me and The Rock will say welcome to all of you. There it is. All right, fam. I give you the FOMC meeting, Jerome Powell, federal funds rate hike pause. Let's listen. I'll be here in the comments responding to your questions and comments, typing. Let's enjoy. Like and subscribe, fam. I'm going to mute myself. And that's it. He's coming soon. He's coming soon. Get all those likes, get all those comments, get all those likes. Let's go. You see, start to see the green? You start to see the green? Where did I take it? There it is. Goodbye.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5 percentage points, and we've continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, today we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Looking ahead, nearly all committee participants view it as likely that some further rate increases will be appropriate this year to bring inflation down to 2% over time. And I will have more to say about monetary policy after briefly reviewing economic developments. The U.S. economy slowed significantly last year, and recent indicators suggest that economic activity has continued to expand at a modest pace. Although growth in consumer spending has picked up this year, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. In our summary of economic projections, the median projection has real GDP growth at 1.0% this year and 1.1% next year, well below the median estimate of the longer run normal growth rate. The labor market remains very tight. Over the past 3 months, payroll job gains averaged a robust 283,000 jobs per month. The unemployment rate moved up but remained low in May at 3.7%. There are some signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has declined, labor demand still substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises to 4.1% at the end of this year and 4.5% at the end of next year. Inflation remains well above our longer-run 2% goal. Over the 12 months ending in April, total PCE prices rose 4.4%, excluding the volatile food and energy categories. Core PCE prices rose 4.7%. In May, the 12-month change in the Consumer Price Index came in at 4%, and the change in the core CPI was 5.3%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.2% this year, 2.5% next year, and 2.1% in 2025. Core PCE inflation, which excludes volatile and food and energy prices, is projected to run higher than total inflation, and the median projection has been revised in the SEP up to 3.9% this year. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5 percentage points. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, especially housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. The economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5 to 5.25%, and to continue the process of significantly reducing our securities holdings. As I noted earlier, nearly all committee participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at this meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its implications for monetary policy. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. In our SEP, participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 4.6% at the end of 2024, and 3.4% at the end of 2025. For the end of this year, the median projection is a half percentage point higher than in our March projections. I hasten to add, as always, that these projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do at the Fed is in service to our public mission. We will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Colby. Thank you. Colby Smith with the Financial Times. I'm curious what gives you and the committee the confidence that waiting will not be counterproductive at a time when the monthly pace of core inflation is still so elevated. Interest rate sensitive sectors like housing, while they felt the drag of the past Fed actions, have started to recover in some regions, and financial conditions, most recently were easing.
So I guess I would go back to the beginning of this tightening cycle to address that. So as we started our rate hikes early last year, we said there were 3 issues that would need to be addressed kind of in sequence. And that of the speed of tightening, the level to which rates would need to go, and then the period of time over which we'd need to keep policy restrictive. So at the outset, going back 15 months, the key issue was how fast to move rates up, and we moved very quickly by historical standards. Then last December, after 4 consecutive 75 basis point hikes, we moderated to a pace of a 50 basis point hike, and then this year to 3 25 basis point hikes at sequential meetings. So it seemed to us to make obvious sense to moderate our rate hikes as we got closer to our destination. So the decision to consider not hiking at every meeting and ultimately to hold rates steady at this meeting, I would just say it's a continuation of that process. The main issue that we're focused on now is determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time. So the pace of the increases and the ultimate level of increases are separate variables. Given how far we have come, it may make sense for rates to move higher, but at a more moderate pace. I want to stress one more thing, and that is that the committee decision made today was only about this meeting. We didn't make any decision about going forward, including what would happen at the next meeting, including we did not decide or really discuss anything about going to an every other meeting kind of an approach or really any other approach. We really were focused on what to do at this meeting.
So there was no kind of initial debate about the possibility of July, any sense of the initial support at this stage for that move?
So again, we didn't make a decision about July. I mean, of course, it came up in the meeting from time to time, but really the focus was on what to do today. I would say about July 2 things. 1, decision hasn't been made. 2, I do expect that it will be a live meeting.
Thanks, Howard Schneider with Reuters. I was just wondering if you could help us understand the narrative here, because it feels like there's been a level shift in the dots, stronger GDP, less of a hit to unemployment, slower progress on inflation, and I'm wondering, in this sort of, where's the disinflation coming from?
Sure.
The labor market's going to be stronger, it looks like. It's not coming from there. Demand's not coming down all that fast, according to GDP. You've doubled your estimate of GDP. So what's the narrative here? It seems like it's getting more immaculate rather than more messy.
So you're right that the data came in, I would say, consistent with, but on the high side of expectations. So, and if you go back to the former SEP, the last SEP in March, you will see that growth moved up. These are not huge moves, but growth estimates moved up a bit. Unemployment estimates moved down a bit. Inflation estimates moved up a bit. And, all 3 of those kind of point in the same direction, which is, that perhaps more restraint will be necessary than we had thought at the last meeting. So, although the level, frankly, is pretty, the level of 5.6 is pretty consistent if you think about it, where the federal funds rate was trading before the bank incidents of early March. So we've kind of gone back to that. So your question is, where's the disinflation going to come from? And I don't think the story has really changed. The committee has consistently said and believed that the process of getting inflation down is going to be a gradual one. It's going to take some time. And I think you go back to the 3-part framework for core PCE inflation, which is, we think, as good an indicator as you can have for where inflation is going forward. You start with goods. With goods, we need to see continued healing in supply side conditions. They've definitely improved a substantial amount, but if you talk to people in business, they will say it's not back to where it was. So that's one thing, and that should enable goods prices to continue, goods inflation to continue to come down over time. In terms of housing services inflation, that's another big piece, and you are seeing there that new rents, new leases are coming in at low levels, and it's really a matter of time as that goes through the pipeline. In fact, I think any forecast that people are making right now about inflation coming down this year will contain a big dose of this year and next year, will contain a good amount of disinflation from that source. And that's, again, probably going to come slower than we would expect. That leaves, the big sector, which is a little more than half, pardon me, of core PCE inflation. That's non-housing services. And, we see only the earliest signs of disinflation there. It's a sector, it's a very broad and diverse sector. I would say in a number of the parts of that sector, the largest cost would be wage costs. It's the service sector, so it's heavily labor intensive. And I think many analysts would say that the key to getting inflation down there is to have a continuing loosening in labor market conditions, which we have seen. We have actually seen, I go through a number of indicators suggesting there's been some loosening in labor market conditions. We need to see that continue. I would almost say that the conditions that we need to see in place to get inflation down are coming into place, and that would be growth meaningfully below trend. It would be a labor market that's loosening. It would be goods pipelines healthier and that kind of thing. The things are in place that we need to see, but the process of that actually working on inflation is going to take some time.
Nick.
Nick Tamaros of the Wall Street Journal. Chair Powell, what's the value in pausing and signaling future hikes versus just hiking now? I mean, not to be flippant, but I don't lose weight just by buying a gym membership. I have to actually go to the gym. 16 of your colleagues put down a higher year-end 23 rate today. A majority of you think you're going to have to go up by 50 basis points this year. So why not just rip off the Band-Aid and raise rates today?
So first I would say that the question of speed is a separate question from the question from that of level. Okay, so and I think if you look at the SEP, that is our estimate, our individual. It's really accumulation of our individual estimates of how far to go. I mentioned how we got to those numbers. In terms of speed, it's what I said at the beginning, which is speed was very important last year. As we get closer and closer to the destination, and according to the SEP, we're not so far away from the destination in most people's accounting. It's reasonable, it's common sense to go a little slower, just as it was reasonable to go from 75 basis points to 50 to 25 at every meeting. And so the committee thought overall that it was appropriate to moderate the pace, if only slightly. And there are benefits to that. So that gives us more information to make decisions. We may try to make better decisions. I think it allows the economy a little more time to adapt as we make our decisions going forward, and we'll get to see. We don't know the full extent of the consequences of the banking turmoil that we've seen. It would be early to see those, but we don't know what the extent is. We'll have some more time to see that unfold. I mean, it's just the idea that we're trying to get this right, and this is if you think of the two things as separate variables, then I think that the skip, I shouldn't call it a skip, the decision makes sense.
I know you said July is live with only one June employment, with only the June employment and the CPI report for June due to be released before the July meeting. You get the ECI after, you get the senior loan officer survey after, you get some bank earnings at the end of next month. What incremental information will the committee be using to inform their judgment on whether this is in fact a skip or a longer pause?
Well, I think you're adding that to the data that we've seen since the last meeting too. Since we chose to maintain rates at this meeting, it'll really be a 3-month period of data that we can look at. And I think that's a full quarter, and I think you can draw more conclusions from that than you come from any 6-week period. We'll look at those things. We'll also look at the evolving risk picture. We'll look at what's happening in the financial sector. We'll look at all the data, the evolving outlook, and we'll make a decision.
Gina.
Thanks for taking our questions. Gina Smilek, New York Times. You obviously, in your forecast, marked up the sort of path for growth, marked down the path for unemployment, and marked up the path for inflation pretty notably. I wonder, since March, what has changed to make you think that the economy is a lot more resilient and inflation is going to be a lot more stubborn? And given that, why do you feel confident that this is as high as you're going to have to revise the federal funds rate, or do you think it's possible we could have even a higher than 5.6% terminal by the end of this cycle?
You know, I mean, on the first part, I just think we're following the data and also the outlook. The economy is, the labor market, I think, has surprised many, if not all, analysts over the last couple of years with its extraordinary resilience, really. It's just remarkable, and that's really, if you think about it, that's what's driving. It's job creation, it's wages moving up, it's supporting spending, which in turn is supporting hiring, and it's really the engine, it seems, that is driving the economy. So it's really the data. In terms of, you know, we always write down at these meetings what we think the appropriate terminal rate will be at the end of this year. That's how we do it. It's based on our own individual assessments of what the most likely path of the economy is. It can actually, in reality, wind up being lower or higher. And you know, there's really no way to know. But it's what people think as of today. And as the data come in, it can move around during the intermeeting period. It could wind up back in the same place. But it really will be data driven. I can't tell you that I ever have a lot of confidence that we can see where the federal funds rate will be that far in advance.
Mr. Chairman, thanks for taking my question. You had said back at the end of May that you thought risks were getting closer to being into balance. Is that still the case, or has your mind changed about the balance of risks out there? And also, could you give us an idea of what would be a sufficiently restrictive funds rate? Obviously the current rate, according to the committee, is not sufficiently restrictive. Is it 5.6? Is it 6 years, or sufficiently restrictive? Thank you.
You know, I would say again that I think that over time, the balance of risks, as we've moved from from interest rates at effectively 0 now to 5 percentage points with an SEP calling for additional hikes, I think we've moved much closer to our destination, which is that sufficiently restrictive rate. And I think that means, almost by definition, that the risks of sort of overdoing it and underdoing it are getting closer to being in balance. I still think, and my colleagues agree, that the risks to inflation are to the upside still. So we don't think we're there with inflation yet, because we're just looking at the data. You know, if you look at the full range of inflation data, particularly the core data, you just aren't seeing a lot of progress over the last year. Headline, of course, inflation has come down materially, but as you know, we look at core as a better indicator of where inflation overall is going. Sufficiently, so I think, you know, what we'd like to see is credible evidence that inflation is topping out and then beginning to come down. That's what we want to see. Of course, that's what we want to see. And I think it's also, we understand that there are lags, but remember that it's more than a year since financial conditions began tightening. I think the reason we're comfortable pausing is that we are still, much of the tightening took place over last summer and later into the year, and I think it's reasonable to think that some of that may come into effect. So we're, you know, I think stretching out into a more moderate pace is appropriate to allow you to make that judgment of sufficiency, you know, with more data over time.
Rachel. Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. I wanted to ask further on the lag effects. When you're considering when you would hike again throughout the course of the year, are there things that you would expect to kick in as those lag effects come into effect that would inform your decisions? Have you learned things over the past year that give you some sense of timeline for when to expect those lags to come into effect?
Yeah. So it's a challenging thing in economics. It's sort of standard thinking that monetary policy affects economic activity with long and variable lags. Of course, these days, financial conditions begin to tighten well in advance of actual rate hikes. So if you look back when we were lifting off, we started talking about lifting off. By the time we had lifted off, the 2-year, which is a pretty good estimate of where policy is going, had gone from 20 basis points to 200 basis points. So in that sense, tightening happens much sooner than it used to in a world where news was in newspapers and not on the wire. So that's different, but it's still the case that what you see is interest-sensitive spending is affected very, very quickly. So housing and durable goods and things like that. But broader demand and spending and asset values and things like that, they just take longer. And you can pretty much find research to support whatever answer you would like on that. So there's not any certainty or agreement in the profession on how long it takes. So, then that makes it challenging, of course. So we're looking at the calendar, we're looking at what's happening in the economy, we're having to make these judgments. And again, it's one of the main reasons why it makes sense to go at a slightly more moderate pace now as we seek that ultimate, I can't point to that ultimate endpoint. I can't point to a specific data point. I think we'll see it when we see inflation, really, really flattening out reliably and then starting to soften. I think we'll know that it's working. And ideally, by taking a little more time, we won't go well past the level where we need to go.
I was curious if you could give us an update on what you're seeing on credit tightening since the bank incidents from March and how you're teasing that out apart from these lag effects.
So it's too early still to try to assess the full extent of what that might mean. And that's something we're going to be watching, of course. And if we were to see what we would view as significant tightening beyond what would normally be expected because of this channel, then we would factor that into account in making rate decisions. So that's how we think about it.
Let's go to Chris.
Thanks. Chris Rugaber at Associated Press. You mentioned that many of the trends are in place that you want to see. Core services ex housing has come in pretty low in the past couple of months. And as you noted, a significant portion of core inflation is now housing prices. And then we've had some quirks in used car prices. So given that these trends are in place, I guess I'm sort of asking the flip side of Nick's question, why signal additional rate hikes? Aren't things headed in the direction you need? Why not simply give it even more time? Or it's surprising to see so much hawkishness in the dots given what we're seeing recently.
Yeah, so we've we're 2.5 years into this, or 2.25 years into this, and forecasters, including Fed forecasters, have consistently thought that inflation was about to turn down, and typically forecasted that it would, and been wrong. So I think if you look at core PCE inflation overall, look at it over the last 6 months, you're just not seeing a lot of progress. It's running at a level over 4.5%, far above our target, and not really moving down. We want to see it moving down decisively. That's all. Of course, we are going to get inflation down to 2% over time. We don't want to do. We want to do that with the minimum damage we can to the economy, of course. But we have to get inflation down to 2%, and we will. And we just don't see that yet. So, hence you see today's policy decision, both to write down further rate hikes by the end of this year, but also to moderate somewhat the pace with which we're moving.
Quick follow-up. I mean, the last press conference you mentioned you didn't see wages driving inflation, and there was some research from the San Francisco Fed suggesting wages aren't necessarily a key driver, but you've talked about the labor market today and the need for softening. Can you give us a little more specifically of how you see the tight labor market driving inflation at this point? Thank you.
Right. So I'm not going to comment on any particular paper, but I would say that I think the overall picture is that at the beginning, in early 2021, inflation was really coming from very strong demand largely for goods. People were still at home. They had money in the bank, and they wanted to spend, and they spent a lot on goods. And of course, at the same time, and because of that high demand to some extent, supply chains got all snarled up. So prices went way up, inflation went way up. So that was the origin, and it wasn't really particularly about the labor market or wages. But as you moved through 21 into 22 and now in 23, I think many analysts believe that it will be important, an important part of getting inflation down, especially in the non-housing services sector, to getting wage inflation back to a level that is sustainable, that is consistent with 2% inflation. We actually have seen wages broadly move down, but just at a quite gradual pace. So, and that's a little bit of the finding of the Bernanke paper with Blanchard of a few weeks ago, which is very consistent with what I would think.
Go to Michael McKee.
Michael McKee from Bloomberg Radio and Television. You said in the past that you don't like to surprise markets. It's kind of been the Fed's view. Markets should have an idea of what you're going to do before you go in. You also said a number of times that it would take a while to bring inflation down. You reiterated that again today, and that we would get to a point where inflation could be sticky. So I'm wondering, as we go into the next meetings, how Wall Street or others should look at your reaction function. What will you be reacting to, time or data? In other words, if nothing much changes, if we're looking at the same sort of labor market, the same sort of inflation levels in July or in September or November, will you move because you've said you feel you need to? Is it time that's going to require additional movement, or would it be a reversal in inflation?
So I don't want to deal with hypotheticals about different ways data might move out. So we of course we don't go out of our way to surprise markets or the public. At the same time, our main focus has to be on getting the policy right, and that's what we're doing here, and that's what we'll do for the upcoming meetings. I will say the July meeting will be live, and we'll just have to see. I think you'll see the data, you'll hear Fed people talking about it, and markets will have to make a judgment.
Well, do you think inflation is likely to continue coming down based on the lags and based on your threat of additional movement, or are we going to be in a period where we're not going to know what's happening?
I think if you look at, if you just look at, I'll just point you to the forecast. So inflation is running, core PCE inflation is running at about 4.5%, a little higher than 4.5%, and the median FOMC participant thinks it'll go down to 3.9 on a 12-month basis. This is by the end of this year. So that's expecting pretty substantial progress. That's a pretty significant decline for half a year. So that's the forecast. We do try to be transparent in our reaction function. We're committed to getting inflation down. And that's the number one thing. So that's how I think about it.
Let's go to Victoria.
Victoria Guido with Politico. Could you talk about the balance sheet and how you're thinking about it? What are you looking for to judge whether we're approaching reserve scarcity, and is Treasury issuance going to affect that? Also, are you considering lowering the RRP rate in order to take some pressure off banks?
So let me say, first of all, on the Treasury part of it, if I can talk about that, and then go back to the balance sheet. So on that, of course, we've been very focused on that for a couple of months, as everyone has. Treasury has laid out its borrowing plans publicly. I think I saw the Secretary's comments yesterday to the effect that Treasury has consulted widely with market participants about how to avoid market disruption, and that they're going to watch carefully for that. So that's from the Treasury, which actually sets the borrowings. At the Fed, we'll be monitoring market conditions carefully as the Treasury refills the TGA. The adjustment process is very likely to involve both a reduction in the RRP facility and also in reserves. It's really hard to say at the beginning of this which will be greater. We are starting at a very high level of reserves and still elevated RRP to take up, for that matter. So we don't think reserves are likely to become scarce in the near term or even over the course of the year. So that's the Treasury part of the answer. We will, of course, continue to monitor conditions in money markets, and we're prepared to make adjustments to make sure that monetary policy transmission works. Was there another part of your question?
Yeah. What are you considering lowering the RRP rate to help take some pressure off banks?
So we have a number of, I would say, the RRP doesn't look like it's pulling money out of the banking system. It's actually been shrinking here lately. So I don't think that's not something we've thought about a lot over time. It doesn't really look like that's something we would do. I think it's a tool that we have. If we want to use it, we can. There are other tools we can use to address money market issues, but I wouldn't say that that's something that's likely that we would do in the near term.
Janelle Marte with Bloomberg. Have you seen sufficient cooling in the housing market to bring inflation down? For example, how does the recent rebound affect your forecast, and how does it factor into monetary policy?
So certainly housing, very interest sensitive, and it's the first place really, or one of the first places that's either helped by low rates or that is held back by higher rates, and we certainly saw that over the course of the last year. We now see housing putting in a bottom and maybe even moving up a little bit. You know, we're watching that situation carefully. I do think we will see rents and house prices filtering into housing services inflation, and I don't see them coming up quickly. I do see them kind of wandering around at a relatively low level now, and that's appropriate.
Do you think you'll have to target that with further rate increases?
Well, I think we look at everything. We don't just look at housing. So I think, you know, the way it works is individual participants sit in their offices all over the country and they write down their forecast, and including their most likely forecast, including their rate forecast, and then they send it in on Friday afternoon, and we accumulate it, and then we publish it for you. So that's how they do that. Well, I don't know that housing is itself going to be driving the rates picture, but it's part of it.
Let's go to Edward.
Thank you for taking the question, Mr. Chairman. Edward Lawrence with Fox Business. So I want to go back to comments you made about, in the past, about unsustainable fiscal path. The CBO projects the federal deficit to be $2.8 trillion in 10 years. The CBO also says that federal debt will be $52 trillion by 2033. At what point do you talk more firmly with lawmakers about fiscal responsibility? Because I'm assuming monetary policy cannot handle alone the inflation or keep that inflation in check with the higher level of spending.
I don't do that. That's really not my job. We hope and expect that other policymakers will respect our independence on monetary policy, and we don't see ourselves as you know, the judges of appropriate fiscal policy. I will say, and many of my predecessors have said, that we are on an unsustainable fiscal path, and that needs to be addressed over time. But I think trying to get into that with lawmakers would be kind of inappropriate, given our independence and our need to stick to our knitting.
Is there any conversation then about the Federal Reserve financing some of that debt that we're seeing coming down the pike?
No, under no circumstances.
Courtney.
Thanks for taking our questions, Chair Powell. So looking at the SEP, it looks like GDP for this year was raised significantly, your forecast for GDP this year. The unemployment rate, meanwhile, was pulled downward. And so should we take that as a sign that the committee is more confident about the prospects of a soft landing, at least as it relates to what you were expecting in March?
You know, I would just say it this way. I continue to think, and this really hasn't changed, that there is a path to getting inflation back down to 2% without having to see the kind of sharp downturn and large losses of employment that we've seen in so many past instances. It's possible. In a way, a strong labor market that gradually cools could aid that along. It could aid that along. But I guess I want to come back to the main thing, which is, though, simply this. We see, the committee, as you can see from the SEP, the committee is completely unified in the need to get inflation down to 2%, and will do whatever it takes to get it down to 2% over time. That is our plan. And you know, we understand that allowing inflation to get entrenched in the U.S. economy is the thing that we cannot allow to happen for the benefit of today's workers and families and businesses, but also for the future. Getting price stability back and restored will benefit generations of people as long as it's sustained, and it really is the bedrock of the economy, and you should understand that that is our top priority.
Just a quick follow-up on that. I'm just a little confused because you said the committee will do whatever it takes to get inflation down over time. But when I look at the SEP, inflation is still projected to be elevated next year, but the Fed funds rate is lower than where it is now. Can you help me understand that?
Sure. So, if you look 2 and 3 years out with the forecast, first of all, I wouldn't put too much weight on forecasts even 1 year out because they're so highly uncertain. But what they're showing is that as inflation comes down in the forecast, if you don't lower interest rates, then real rates are actually going up, right? So just to maintain a real rate, the nominal rate at that point, 2 years out, let's say, should come down just to maintain real rates. And actually, since we're probably going to, we're having real rates that are going to have to be meaningfully positive and significantly so for us to get inflation down, that probably means that certainly means that it will be appropriate to cut rates at such time as inflation is coming down really significantly. And again, we're talking about a couple years out. I think, as anyone can see, not a single person on the committee wrote down a rate cut this year, nor do I think it is at all likely to be appropriate if you think about it. Inflation has not really moved down. It has not so far reacted much to our existing rate hikes, and so we're going to have to keep at it.
Julie.
Hi, Chapo. I'm Julie Chabanas, AFP.
The mic is coming.
Oh, sorry. Thank you. Hi, Chapo. Julie Chabanas, AFP News Agency. The May job report showed a rebound in May in black workers' unemployment. Is it consistent with the Fed's maximum employment mandate? Are you worried about that, about this rebound?
So we are, of course, worried about, there are long-standing differences in racial and ethnic groups across our labor market. That's a factor that we can't really address with our tools, but we do consider that when we're thinking about what constitutes maximum employment. It is for us a broad and inclusive goal. And so we do watch that. But remember, all unemployment, including black unemployment, has been bouncing around right near historic lows, historic modern lows here. So we're still talking about, what is as strong a labor market as we've seen in, a half century here in the United States. So overall unemployment of 3.7% is 0.3 higher than it was measured to be at the last a month ago, but still it's extraordinarily low. And so it's a very, very tight labor market.
Megan.
Thank you. I want to follow up first a little bit just on the rent question on housing. We heard Governor Waller talk about how, I'll back up, we haven't quite seen the slowdown in rents show up in CPI yet, and we did hear Governor Waller talk about how an uptick in housing might mean that there's not going to be as much relief coming or a shorter bit of relief than we thought. Can you talk about how you're thinking about that and how that played into today's outcome?
I wouldn't say, so that's, as a factual matter, that's correct. We do need to see, rents bottom out here or at least stay quite low in terms of their increases, because we want the, we want inflation to come down, and rental is a very large part of the CPI, about a third, and it's about half of that for the PCE. So it's important, and so it's something that we're watching very carefully. It's part of the overall picture. I wouldn't say it's the decisive part, but take a step back. What you see is look at core inflation over the past 6 months, year. You're just not seeing a lot of progress, not the kind of progress we want to see, and it's hard to avoid that. And the committee, people in the committee, the median went up significantly, so that the median participant now thinks that core PCE inflation on a 12-month basis will be 3.9% this year. So once again, every year for the past 3 years, it's gone up over the course of the year, and that's doing that again. So we see that, and we see that inflation forecasts are coming in low again, and we see that tells us that we need to do more. And so that's why you see the SEP with where it is.
Could you also talk briefly about your outlook for wages, and given the recent slowdown in core services excluding housing, how far you think wages might need to fall in order to get inflation back in line?
So wages will continue to increase. So what we're talking about is having wage increases still at a very strong level, but at a level that's consistent with 2% inflation over time. And so I think we've seen some progress. All of the major measures of wages have moved down from extremely elevated, not extremely, but highly elevated levels a year or so ago, and they're moving back down, but quite gradually. And you know, we would want to see that process continue gradually. Of course, it's great to see wage increases, particularly for people at the lower end of the income spectrum. But we want that as part of the process of getting inflation back down to 2%, which benefits everyone. I mean, inflation hurts those same people more than anyone else. People on a fixed income are hurt the worst and the fastest by high inflation.
Greg.
Thank you so much, Chair Powell. Greg Robb from MarketWatch. I just wondered if the committee has talked at all about the labor market, and there's strikes now in Hollywood, and now the United Auto Workers are talking about a possible strike. I mean, aren't workers, we have some, workers have power now and are going to be seeking higher wages. Does that come up in your discussions? Thanks.
So the topic of wages in the labor market and dynamics in the labor market is about as central a topic to our discussions as anything. I mean, it's very, labor economics, you know, and the labor market are utterly central. You know, it's half of our mandate. So we spend a lot of time talking about that. I think, you know, there are structural issues that are really not for the Fed. And so we don't spend a lot of time, although we take notice of what's going on. But we're not, you know, we're not involved in discussions or debates over strikes and things like that. But we, you know, we look and we see what's going on, and you know, we're making judgments about what it will take to get inflation down to 2% in the aggregate. And as I said, don't think that was about, most folks would say now, it wasn't really about that, about wages at the beginning. And it's becoming more about that as we get into really service sector inflation, which is the part of the economy where we have seen the least progress.
Let's go to Mark for the last question.
Thank you, Mr. Chairman. Mark Hamrick with Bankrate. Wondering what your thoughts are now about systemic risk, now that we're about 3 months past the failure of Silicon Valley Bank, and also specifically, what are the risks associated with commercial real estate as well as non-bank financials, and could you further elevate those risks with higher still rates, possibly for longer?
So, we're trying to think where to start. I'll start with commercial real estate. We, of course, we're watching that situation very carefully. There's a substantial amount of commercial real estate in the banking system. A large part of it is in smaller banks. It's well distributed. To the extent it's well distributed, then the system could take losses. We do expect that there'll be losses, but there'll be banks that have concentrations, and those banks will experience larger losses. So we're well aware of that. We're monitoring it carefully. You know, it feels like something that will be around for some time, as opposed to you know, something that will suddenly hit and you know, work its way into systemic risk. In terms of non-bank financial sector, there's been a ton of work, and you know, clearly in the pandemic, it really was the non-bank financial sector where issues really arose, and you know, there's a lot of work going on with the administration, in particular, leading that to try to address issues in the Treasury market and in all kinds of areas in the non-bank financial market. But you know, our jurisdiction at the Fed is over banks, actually bank holding companies and some banks. So that's really our main focus. You know, in terms of the events of March, as I mentioned earlier, we will be carefully monitoring that situation. You know, our job generally involves worrying about a lot of things that may go wrong, and that would include the banks. It might be hard for me to identify something that we don't worry about rather than that we do worry about. So we're watching those things very carefully. And as we see things unfold, as we see what's happening with credit conditions and also all the individual banks that are out there, you know, we'll be able to take, to the extent it's appropriate, we can take, if there are macroeconomic implications, we can take that into account in our rate setting. And so I guess that's what I would say.
Can I just follow up on the last part? That's, do you risk further exacerbating those issues if you get up to another 50 basis points?
So that's, and I guess I meant to address that by saying, as we watch, we'll see what's happening, and if we're seeing the kind of tightening of conditions that you could be referring to, then we can factor that, because really we use our rate tool it really has macroeconomic purposes, so we'll take that into account. Of course, we have responsibility for financial stability as well, and that also is a factor that we're always going to be considering. Thank you very much.
Done. Well, everybody, it's always a pleasure to share one of those long FOMC meetings with you all, about to be 2 hours. So here's the briefly summary. And all of you watching, welcome, welcome. Very happy that you stick with me for a while here. So FOMC meeting they decided to pause rates. You have three options: increase federal funds rate, pause federal funds rate, or cut federal funds rate. What's going to be bullish for us, everybody, is going to be when they start cutting federal funds rate, right? That's when they have achieved that 2% inflation. We don't have it here. The CPI, it's awesome at 4%. It's going down really fast, but they're not looking at the CPI. They're looking mostly at the core CPI that is 5.3%, meaning that there's still a lot of work to do. And I put up here in the chat another good and important thing to consider, which is the core PCI, which is the core personal consumption expenditure price, that provides a measure of the price paid by the people for domestic purchases, excluding price of food and energy, right? That is what the core CPI actually also measures. So those are the two, the PCI and the core CPI too, right? That once they start really falling a lot, and they're looking at a year from now, 12 months from now, we're not gonna see, based on the decision made today and this 45-something long conference that we were going through, understanding that it's good that inflation is going down slowly. There, obviously, the way Jerome Powell is put out is he's a person of data, right? He's looking at everything, analyzing, monitoring. That's, I don't even know how many times he mentioned monitoring, but a lot, and that's good. One of you, put out a comment saying, at least this guy knows what he's talking about. It was somewhere right here, because Gary Gensler from the SEC is totally the opposite of this guy, and we don't want that. We want somebody who is at the top of their game, at least. So what we got to us, I'm going to go ahead and close this poll. It's a consolidation trend. Are you bullish or bearish? 65% of you, fam, yes, bullish, 20% bearish, and 20% non, and 14% bearish. So it might take longer than today. It might take longer than this week, but as of now, it's always good when we don't have a rate hike. When it's going to be extremely bullish is when they start cutting rates. And as of now, that is not going to happen. That is now what's going to be extremely bullish for everybody, right? But having a pause, it's the first step to get to a cut. That's basically what it is. So far, fam, let's go back and do a review. 1.06, we started at 1.06, and at 1.06, this was basically not much movement, but at least we got to see, learn, and explore. And like I said, now I'm going to go to my 4-hour view, right? The FOMC got us a red candlestick in the 4-hour. It's following the consolidation. Might take a while for whales to come and destroy it. And we'll be here to watch everything, unwrap. My friends and fellas, 2 hours live. I couldn't be more excited and grateful with all the Crow fam, the Shiba Inu community, the Bitcoin, the crypto, everybody. Don't forget to smash the like button, please, and consider subscribing to the channel. Welcome aboard to another time with Oscar Ramos. That's it. That's all I got for you. Any comments, questions, let me know in the comments down below. Thank you to everybody for coming in, members, subscribers, new members, new viewers. There you guys have it, right? I think we'll leave it at that because it's been a long one. But like I said, every time we have an FOMC meeting, it's important. I'll see you in the one in July. And They're probably expecting to rise, right? 50 basis points or so. Well, we'll see how that turns out. Thank you, everybody. Blessings. Be safe. And I'll see you next time, everybody. Peace. Thank you, Chris, Incognito, and everybody. Thank you for coming in. What's a decent FOMC meeting? Let's now wait and see the results. Ciao.